Let's go through an example of how to do a bank reconciliation. In the last video, we said that we have our books and records on the left here and the bank statement on the right, and neither of them is right because both of them are missing some pieces. And what we're trying to do is find out what is different between the two and how much cash do we actually have. All right, first step is we're going to figure out what matches between the two. Now, people, when they do this, they're usually going through and doing check marks, and that's what I like to do as well. So I'm going to check for the things that match. So let's look at our receipts. I have a receipt on May 4th for $4,150 according to my books. I'm going to look over here on the bank statement, and hey, there's a $4,150 on May 5th. Now, is that a problem that the dates are a little different? No, it's not, because I probably put it into the night deposit box on May 4th and the bank got it on May 5th. That's perfectly all right. So those are probably the same one. So I'm just going to check those ones off. Let's go down to May 9th, 540. Okay, 540, those match. 560, yep, they match. 2,190, I think I see that one over here as well. 1,870. I don't see that one here. Now, why is that? Well, it's probably because I put it in the box on May 31st and the bank got it in June. So, since this is May's bank statement, it's not there. Whenever I find a difference, I'm going to put it on my reconciliation. The starting point for my reconciliation is what is the balance? And we're going to call this, for lack of a better word, the unadjusted balance. Now, this has nothing to do with adjusting entries, which is why I hesitate to use this term, but it's the term that we often use with bank reconciliations. And I'm sorry if that's a little confusing that we're reusing some terminology here. So the unadjusted balance is, what does the bank statement say? And what does our books say? So our books say we have at the end of the month, and I want to make that clear, this is on May 31st. Our books say we have $16,650, and our bank says we have $18,590. Neither of those is right. We're going to find the right number. All right, and we found one difference. So this is a deposit in transit. I will abbreviate it DIT. And I need to put it on the side that doesn't know about it yet. My books know about it. It's on my book side, but the bank doesn't know about it. So I need to put it in the column that shows the bank. Now, once the bank does know about it, what is going to happen to my cash balance in the bank? Well, when they find out I have a deposit of $1,870, they are going to add it to my balance. So I will add the deposits in transit to the bank side. Again, the bank didn't know about it. Once they do, they will add it. All right, let's start going down the cash payments. I wrote check 1416 for $850. Nice thing about numbered checks is that we can kind of check to see that the check number is the same. And we have to check the check number and the amount. All right, so we have 1416 for $850. I have this $160 check that matches the check number and the amount. 670 right there. I have check 1419 for 1690. Hey, I have check 1419 right here as well. So I'll check those two off. I am missing, though, these three checks. Now, why are those ones not on the bank statement? If you remember back on our last video, we said that the process of writing a check and getting it cashed and showing up on the bank statement takes a while. So these checks may have been written at the end of the month. They could have even been written 3 months ago. So we say, all right, these checks, I know about them. The bank doesn't. These are outstanding checks. I will abbreviate it OS. Once the bank does know about them, what is going to happen to my bank balance? It's going to go down because the bank is going to take money out of my account. So I will subtract all of these checks from my bank balance. Again, I'll remind you that we put it on the side of the person who doesn't know about it. It's already on my books. Those checks are already there. So I'm going to subtract it from the bank side. They don't know about it. All right. We've covered everything on our books now. Let's start looking at our bank statement. All right, we have a few things here that weren't checked off. One is this EFT. So this was an electronic payment we received. So we probably got this from a customer. We need a little bit more information to know what it actually is, and that's what this additional information is for. So that says this was because we got rent from a customer. So we got rent. Who didn't know about this? We didn't know about it. So our book didn't know about this, so we need to add it to our book because we received $200. All right, what's another thing? Hey, this bank collection. We talked about that in the last video, that our customer was just paying our bank and then the bank was putting the money in our account. We didn't actually handle the check or whatever it was. So the bank is doing the heavy lifting for us in that case. So we didn't know about it until now. And so this is a note receivable for $1,700. We now know about it. We know we got $1,700. So let's add that to our book balance. All right, let's jump down here to our payments. One was an NSF check. Again, just to remind you from the last video, this means that we thought we had $700. It was probably included in one of these deposits, maybe this one, but the bank tried to get reimbursed from our customer's bank, and the customer's bank said, hey, there's not $700 here. It's a bounced check. So our bank, they had already put $700 into our account, but they said, sorry, there's not money for that. So they took the $700 back out. So we need to subtract $700 for the not sufficient funds check or the bounced check. All right, moving on. We have this EFT payment. We probably set up some sort of automatic payment of $400. We don't have that written over here yet, so let's subtract another $400. We didn't know about it until now. This was for insurance, it said, so I'm just going to write that. That's what the extra information is for. It said that is for an insurance payment. All right, last one down here, SC stands for service charge. And so there was a $10 service charge on our account. That's the fee that the bank is charging us. And so now we know about it. We said, all right, let's subtract another $10. We didn't know about this until now. Okay, so we have all of the differences. And now we should be able to get to the true amount of cash And these numbers should match because now we have on the book side everything that we didn't know about until we got to the bank statement. And we are adding and subtracting from the bank statement everything that they don't know about. So we are sharing information between these two areas, and hopefully we get to the same number, the actual cash that we have. All right. Let's get a calculator and add up these things. All right, so we have 16,650 plus 200 plus 1,700 minus 700 minus 400 minus 10 gets us to 17,440. All right, if we did this right, we get the same amount on the other side. 18,590 plus 1870 minus 1450 minus 1200 minus 640. Uh-oh, I did not get the same amount, 17,170. That means we made a mistake somewhere. Someone made a mistake. Let's, to make things a little bit easier here, let's figure out what the difference actually is. And so I'll go 17,440 minus 17,170. That's a difference of $270. Now, if I'm actually doing this in real life, I'm going to look at a couple of things. One is I'm going to look on my book side to see if I missed any payments of $270 to get that down to the same as the bank. Or did I miss a deposit in transit on the bank side or something like that that I had on my books. In this case, I'm pretty sure we got everything. So there's no missing payments or missing checks or missing EFTs. I accounted for everything on there, which means the other possibility is I didn't notice that there was a mistake. And this is divisible by 9. So I'm going to tell you a little trick here. If something is divisible by 9, it probably means we have a transcription error or a transposition error, meaning that we flipped two numbers. And it's really hard for our eyes to pick up when two numbers are flipped. The way our brains work, especially if we're reading something very quickly, you might not see the difference between 1,870 and 1,780. If you see those two numbers side by side and you're just reading through things very quickly, your eyes might not pick up on the difference. And that's what happened in this case. We have this check 1419. Maybe some of the more astute observers of this video saw this when we were going through it. But this check set on our books was 1690, but the bank cashed it for 1960. So that's the case where we're looking through this very quickly, and to our brains, those numbers look the same. At least, again, if you're reading quickly, they look the same, but they're not the same. And this happens all the time when we are typing in numbers in the computer. We switch things, or when we're reading through and typing things. Yeah, it happens, right? It happens a lot. Which one is more likely the correct number? Again, the bank is more likely to be the right one. So we have to fix our books. Now, it could be the other way. You go back and look at the invoices and the records and everything, say, no, I really did write that for 1690. But usually it's the other way around. So let's assume that we made a mistake when we typed it into our books. So we say, hey, this 1690 was actually supposed to be 1960. So now we have to ask ourselves, is this more or less money than I thought I had? Well, the check is supposed to be $270 more which means I have $270 less in cash. So I made the error on the books. So that's why I put it on the book side, because we made the mistake. I have to fix the book side. If the bank made the mistake, I would put the error over here. Now, is this going to be a positive or a negative number? It could be either one. It depends on which way the mistake went. For example, in this example here, if we thought we wrote the check for $1870, but we actually wrote it for $1780, we have more money than we thought. We can also make these mistakes on deposits, where we write the wrong deposit amount. So then we, again, have to ask ourselves, do we have more or less money than we thought? And so that just determines whether you add or subtract it from the book balance. All right, so in this case, we say, all right, we have less money than we thought, so we need to subtract it. Let's see if that fixes our balances for us. So 17,440 minus 270 is 17,170. Hey, things match now. So that's the actual amount of cash that we have, 17,170. Again, I want to point out that neither our book in the beginning nor the bank in the beginning had it right. Both of them were wrong, and we had to make adjustments on both sides to get to the actual right amount. And we adjust both sides so that we know we have found all of the differences, and we can be certain that the 17,170 is the right number. All right, at this point, we are now ready to do journal entries. These journal entries aren't really anything special. They're just going to be like regular transactions. So we only need to adjust for things on the book side. We cannot change the bank's records. We don't go to the teller and say, hey, you need to make a journal entry for this rent amount or for this outstanding check. We can only change our side. So we're only going to look at things on the book side. Everything that was adjusted here, we are going to make a journal entry for. And we are going to ask ourselves, what if this were a regular transaction? What would the journal entry be? It's not going to be any more complicated than that. So, for example, this first one, we said we got $200 for rent. It's not anything special because it's on the bank reconciliation. We just say, hey, we had a customer pay us $200 for rent. Our cash went up $200, so debit cash, and that's rent revenue. So credit that. It's the exact same entry as if you had seen it on a list of transactions in Chapter 2, saying our customer paid us $200 for rent. Let's move on to the next one. Our customer paid us $1,700 on a note receivable. If this were just a regular transaction, we would say, all right, we got $1,700 in cash, so let's debit cash and credit notes receivable. Let's skip the NSF check for now. We'll come back to it. We spent $400 on insurance. If this were a regular transaction, you would just say, all right, well, that must be insurance expense, $400, and we credit cash $400 because we spent $400 in cash. I will point out, you maybe are doing prepaid insurance instead of insurance expense. You have to read the situation. I was assuming an insurance expense for this one because I am assuming they're paying month to month and they used up the insurance this same month. So If this were paying insurance for an entire year, I would probably debit prepaid insurance instead. All right, let's move on to the service charge. We paid the bank $10 for services. That's essentially what this is. So we look at the chart of accounts and find an appropriate account. I'm just going to call it bank expense. It could be service charge expense, could be fees expense. Just find something appropriate, and then we'll credit cash $10. Let's get to this NSF check. And the easy part is we have to credit cash $700. We did say that what's the first thing that you're going to do as soon as you found out your customer didn't actually pay you? You're going to go back to them and say, you owe me money. What account does that sound like? If someone owes us money, that sounds like a receivable. This goes into accounts receivable because our customer owes us money. All right, let's look at this error now. Errors don't have a set template per se for the journal entry. In this case, we know we have to reduce cash, so we will credit cash 270, but where does it go? This really has to do with where did it originally come from? What was the original journal entry that we are trying to fix? The original journal entry in this case, since it was a check, the entry was most likely debiting accounts payable, $16.90, we're probably paying an invoice or something, and crediting cash, $16.90. So that's the journal entry we are trying to fix. So we need to use the same account that was in the original journal entry. So in this case, we say, all right, it is accounts payable that we are trying to fix. If this were a deposit we are trying to fix, it might be accounts receivable. It might be sales revenue. It just depends on what was the original journal entry and what was the account we were trying to fix from it. So in this case, again, we made a mistake. We were supposed to debit accounts payable 1960, but instead we only did 1690. So we need to debit it another $270 to fix our mistake. All right, so that is the bank reconciliation process. And where you would use this is usually at the end of the month. I mentioned in the last video that this is a very important process for everybody to know. And if there's just a couple of things you get out of this class, I want you to know how to read financial statements, and I want you to know how to do a bank reconciliation. Why is the bank reconciliation crucial? This is one of those internal control activities that you do to make sure people aren't stealing from you. So let's say you have someone else writing your checks and purchasing stuff for you, and you're the owner of the business. As the owner of the business, you need to look at stuff once in a while. Maybe you trust the person, but you still need to check things. The only people who can steal from you are those that you trust. So, as the owner, you should know how to do a bank reconciliation and maybe do it or at least read them. Maybe you have your accountant do the bank reconciliation, but know how to read it and know what's going on. If you see large reconciling items, that might mean you need to check up on things. It could be that they took money out of the bank account and are just trying to make it match the books. So that's often a sign of fraud, or large reconciling items that have been out there forever. So as an owner, just make sure you know how to read bank reconciliations. The other place that this comes in handy is in your personal life. being able to reconcile your credit card statement, your bank accounts, and everything else to make sure that you know how much money you actually have. So it's one of those life skills you should have, knowing how to reconcile your bank account.